What is going on, everyone? Thank you for joining me today. In this video, we're going to be talking about, is it the right time to buy a property in Naples, Florida? As you can see, I am not outside, and one of the reasons why is because it's like 92, 93 degrees outside today. So I'm doing this from the comfort of my own office here at my house. And today we're going to cover the data that I was able to find, not my opinion, but the data that I was able to pull up, which kind of shows us what the best time of year to buy a property is. And not only that, but is it the right time to buy now, or should I be waiting? Well, you're not going to want to miss it. I'm going to cover some really good stuff, and you're going to be shocked when you find out what I was able to uncover. All right, guys, as you can see here on our first chart, we have some really good information pulled up about for 10 years. So this is some historical, not hysterical. You're going to go hysterical when you see the price increases, but this is some historical information that is really kind of showing us the trend that we're on, or the path that the real estate market is headed towards down here. Now, wouldn't you have liked to buy a house in 2012 when you could have got something for $175,000 down here? That would have been very nice, very good increase or appreciation on your asset here. But what I wanted to show you is that historically, looking back, the cheaper months for us to be able to purchase a home have been in the earlier months. Like January has historically been the cheapest month to buy. Now, remember, the information that we see here is about 30, 60, or 90 days old, because home prices don't get recorded when you go under contract. They get recorded when you close. So with that being said, if we're getting the cheapest prices towards the beginning of the year, number one, it's because it seems to be appreciating as the months go by. And number two, the reason why is because we're actually going under contract on those properties towards the tail end of the previous year. Okay. That's number one. Now, the highest prices of the year tend to be somewhere between the months of April to towards the end of the year sometimes, right? So as you can see here, for the first few years that we have information for here, we see that the highest prices have been from April to June. Now, what that means is that if we start looking for a house in the earlier months, such as maybe January and February, then we're going to tend to pay more for homes than we would if we started looking for homes towards the tail end of the year. Now, that's what was happening back then in the first 5 or so years. But let's fast forward to the last 5 years of what's been going on in the housing market. And you can see there's been a little bit of a change. So what we're seeing here in 2016 is that the cheapest prices of the year are now starting to actually move down further into the year, as opposed to where we were in the first 5 years. As you can see here, we had in July, we had the lowest price of the year in 16. In 2017, also July. In 2018, we had August, again in 2019. Now, something obviously changed in 2020, because obviously when we had the pandemic, there was everything went bonkers. All the traditional information started to shift, and that's kind of where I want to draw your attention to right now. In 2020, as you can see, the cheapest price of that year was in obviously May. Because why? Because March and April, people were panicking. As you can see, the median median home price in March was $377, but it dropped about 10% down to $340. In just 2 months' time. So that was an anomaly, which we're probably not going to see in every single year. But again, what we started to see at that point was that prices continued to go up and up and up on a steady rise. And when we got to December of that year, that was the most expensive time of the year to buy, because home prices just kept going up. They were not following any kind of seasonal pattern. Now, in 2021, just last year, exactly what I would have expected is that the cheapest time of the year was the first month, and then the most expensive time of the year was literally almost up to the last month of the year. It was in November, just off by $5,000. It could have been obviously December. So what this is telling us is that the seasonal type of trend is no longer what we're seeing. What we're seeing now is a supply and demand type market. Now, if we look at 2022, it's still following the same type of incrementing. We have the cheapest price at the beginning of the year, starting at $550. Then we climbed to $560 in February, $588 in March, and now we have $603 in April. Okay. Now, this is exactly what I've been expecting. Why? Because I'm going to give you some other charts to kind of back this information up. I'm still expecting for us to continue on this path of incremental growth. Why is that? Because we don't really have that much inventory still. I'm gonna go ahead and share with you the information on the third chart, but the second chart that I want to share with you right now is this one, the days on market chart. Days on market represents how long a property has been sitting in order for you to be able to get a better deal, or if you're going to end up having to pay more for that house. So the longer a property is sitting on the market means the cheaper you're going to get a property, and the least amount of time it sits on the market means there's more demand, so you're going to end up paying more. So I'm sure you guys understand that makes sense. Now going back to 2017, we see that the average time on market is roughly about 2 months, 53 days, 60 days, 67, 72 days, and home prices were somewhere between 350 to 380. But as we go down into the further years, we start to see that we kind of peaked somewhere around 77 days. I think that was, where did I see that? I saw 71 days here in 2018, or 72 days in 717. So these would have been good times for you to buy. Now the days on market, obviously they do also depend on what time of year it is. So as you can see, the highest days on market in 2017, if we just take a quick look here, was from an eyeball level, it is at 73 days in October, 72 days in July. So somewhere in the middle of the year is when you see the most days on market. Now, the least days on market is in January. Because why? Because we have what's called like the snowbird type of market down here, that between December and April, there's a lot of people that come down here. So those times of the year tend to have more action and more demand for housing. Now, if we go down and we take a look at what's going on after the pandemic, when we look at March, we see 62 days on market, 52 days, 56 days, 63, 62. So it's still kind of steady here. But then we went to 48, 43, 47, 34, 33, 39, 32, 30, 22. And then we get into the single digits when we hit May of 2021. Now, when we get the single digits, obviously the price is also going to follow. So as you can see here, we're still floating around somewhere in the 300, 400 range. As soon as we drop into the single digits, we start approaching almost $500,000 as a median price. And now, if you look at where we are, we're we're at the lowest point that we've ever been in history. 5 days on market to sell, and the housing prices obviously are the same. They're following the same kind of pattern, which is the most expensive it's ever been in history, with the exception of March. We had a 699 median list price, and right now we have a 677,000 median list price. Now, 1 month of information where you see 699 and 677, just 1 month of having that discrepancy doesn't mean that that's going to be a trend. I do think, personally, if you ask me, I do think it's going to be a trend nationally. Locally in Naples, I don't know if that's going to constitute a permanent trend now to the downside. Because why? Because we still have very, very few days on market. If we would have gotten 8 days on market or 12 days on market here in April, and we would have gotten 677 here, then I would have said, maybe this is a pattern or a trend. Until we get May's numbers, then I'll be able to really kind of tell more, because we did recently just get that rate hike, and interest rates recently just did go up. So I'll be making more videos like this in the future to kind of keep you guys up to date about what's going on. But one other chart that I want to show you, which is very interesting, is this one here. The active listings that we have on the market, and the times of year that we have the most listings. So going back to 2017, pre-pandemic, we tend to have the most listings towards the beginning of the year. We had March being a very popular month, and then towards the end of the year in September, we have the least amount of or the middle of the year, towards the end of the year, we have the least amount of inventory. So as you can see in 2017, we had almost 8,610 listings in March, and then we had 5,950 in September. The kind of that same kind of pattern repeated for the next few years. But what I want to show you, which is a very crazy, which is kind of turning everything on its head, is what happened in 2020 and going into 2022. So as you can see here, the most amount of listings, obviously beginning of the year. Now in 2020, we started to have a little bit of shift. What the main shift was that the least amount of listings started happening towards the end of the year, and the most amount of listings were happening in the beginning of the year. So what we're starting to see is that inventory was dissipating, it was going away. And the same thing happened in 2021. The most amount of listings were in the beginning of the year, and the least amount of listings were at the very last month of the year. So what this is telling us is that we're running out of inventory, consistently running out of inventory, and we don't have, it's not a seasonality thing anymore. It's now just a supply and demand thing, like I mentioned to you earlier. But the strange thing that I'm seeing right now for 2022 is this: we had the least amount of listings in the beginning of the year, but now we're creeping up. We're actually getting more inventory for the first time in the last, I want to say, almost year and a half, 2 years. So this is telling me that we might get a softening in the market if we get May's data, and May's data shows that we have even more listings. We have more than 3,687 listings on the market. Now that's telling us that that's a trend, which means that we're getting more housing on the market, which should level off prices. And if interest rates continue to go up, it could even mean that home prices might start climbing back down, or maybe I say climbing, but dropping down. So I'm kind of excited for that, because it has been literally impossible to get real estate down here. I've had clients and buyers who have been all cash, above asking, way above asking, tens of thousands of dollars above asking, and you can't even become a backup offer. Now I want to share a quick story with you. Most recently, I was working with a couple, Janet and Richard, and I was finally able to get an offer accepted. Believe it or not, guys, as crazy as it may sound, finally been able to get something for a client, and they only had to pay full price. Yes, granted, they were cash, but even with cash buyers recently, it's been impossible. Even when we offer tens of thousands of dollars more, it has literally been like pulling teeth trying to get even in the running to get those properties. But now I'm starting to see the market, I don't want to really necessarily call it softening, but maybe return to a healthy level, which is very encouraging, not only for my clients, but also for me, because I've been also kind of in the trenches waiting for the right time to go out there and look for a property. I've had to expand my search on investment properties nationwide just because it's been so hard to just find anything in these markets. Now, with that being said, real estate is all local, so maybe you're experiencing something different in your part of the world, your part of the country. Let me know what you guys are experiencing down below in the comments. I would love to do a video maybe later on next week or something on what's going on across the country and what kind of a trend we're seeing. And normally trends do start in different markets, such as usually the West Coast has a trend that moves over into the East Coast. That's actually what happened in 2008. We started to see the housing crash happen on California, and then it all kind of contaminated over into the East Coast. So let me know if you guys are experiencing something like that in your marketplace. I'd love to hear about that. Not only that, but I also want to tell you guys that nothing goes up in a straight line forever. You know, not stocks, not crypto. The housing market usually takes a little bit longer to actually come around, because it's a lagging type of market, because it's not very liquid. What I mean by that is that if you want to sell your house and you decide today, hey, I want to sell my house, you can't just cash out of it, immediately. It usually takes you anywhere between 60 and 90 days, sometimes even longer, to get your money out. So we've just been experiencing now for the beginning part of this year, one of the worst starts to the year in the market, in the stock market ever in history. And real estate, a lot of people are saying, a lot of very well-educated analysts and investors are saying that real estate is going to be the next domino to fall. Now, I hope it does to some degree, because it would normalize the market. Right now, we need to have more inventory. A healthy market would allow us to have 6 months of inventory for us to be able to go out there and look for something. Right now, we're down to less than 2 weeks in some markets. As you can see, 5 days on market for the homes down here in Naples. And I'm sure it's the same story in a lot of different places around the country. So remember, guys, if real estate continues to go on this rampage that we've been on, no one will ever be able to afford anything. So we kind of have to reel that back in. When you add in the interest rates have been going up, gas prices have been going up, the cost of putting food on your table going up, well, that's going to show up and reflect into the other things that aren't necessarily the most needed on a day-to-day basis. Yes, real estate is needed, but people sometimes tend to maybe rent a little longer or maybe stay in their existing home a little longer if it's not necessary. But when it does come time to buying something, people aren't going to be able to afford as much, because remember, in order for you to get a mortgage, your living expenses plus your mortgage expense can't be more than 50% of what you're going to be showing as income. So as that number starts to increase, your expenses start to increase, well, the amount that you're qualified for a mortgage will start to decrease, and that will lead to the home prices, maybe not in all markets and maybe not the same amount, but it will start to come down and allow us to have more of a healthy market. So fingers crossed on that one, guys. Let me know what you think down below. Also, don't forget, if you guys are looking for a property in Southwest Florida, there will be a link down below where you guys can work directly with our team. If you're looking to sell your property, well, we can help you with that just about anywhere in the country. And if you're thinking about getting into real estate, guys, or if you're already in real estate and you just want to work with the most dynamic real estate company in the entire world, and you want to become an owner of it just like we are, well, go ahead and use the link down below as well. I'd love to talk to you guys about that. Thank you for watching, guys. I love you, and I will see you next time.